Remember, please hit like and subscribe for me. Thank you so much. Okay, let's go. Hi, everyone. Today is Friday, August the 15th, and this is the Moneyball Morning Report for the Benzinga Pro platform. My name is Anne-Marie Band. We start by taking a look at the ES today. It's had an unusual amount of pre-market volume, and of course, this is using the typical volume by time of day on TrendSpider, and you can see all these yellow bars, goldenrod bars, telling us that most all of the price action has been above normal, not extraordinary, except for these wicks, except for these. And so this candlestick here at 6:30, a pretty important one to stare down, but the biggest motion did occur at 4:30 or so, and that is, of course, Europe's open. So the fade there suggests that we've got a ceiling event at 6,504, and if we break above that zone, we'll have room for an extension to the upside. So what does the volume profile tell us? Notice here's the volume profile: value area high, 6,497. Value area low, 6,476. So we are above and outside the value area. Wow, that is some pre-selling into the retail sales number that's coming in. It's pretty messy. Notice, see momentum trending down. Our 63 is up, but our 14 is flat. That's giving us a cross current. And remember, when we have cross currents, price actions will retrace. So you're looking for the base of where major support should sit in general. Now, the 3:30 p.m. Eastern candlestick, last 30 minutes of the trading day, 6,488. That looks like a floor to me. We can see the point of control just below at 6,484. And this candlestick here, of course, is yesterday's highest volume candlestick of the day. All right, so staring those things down looks a little bit messy to me. Dips are still buys, but it would be nice to see 6,480 come in, or that 6,476 to frame out a long area. We could have a pretty savage wick at 8:30. Of course, we'll still be recording then, so we'll be able to see it and see what happens. We're grinding to the north, consolidating as we go. So again, above it, 6,504, 6,505, potential breakaway. We've had no real volume exhaustion, but as I mentioned in the chat towards the end of the day, hey, expect some kind of volume exhaustion into the edge of the day based on the overall congestion of the chart. We held that volume exhaustion. It gave us a higher low. That gives us more motion. Same thing we're looking for here. Potential volume exhaustion into the low volume node, or even back into 6,470. That would be great, right? Give us another fantastic buy zone. Try to set up, one, maybe two trades, and then just live your life, let the market do its thing, and don't overanalyze. Just think about where the big pockets are and approach the charts from there. I know that's hard. Listen, I know. I live it just like you. But at some point, we have to say, what's the storyboard? So I'm not really sure what happened in the tech sector, but all of the semis are down this morning. And applied materials, for instance, was down at negative 14.5%. So that's pretty sassy number, if you ask me. So we're seeing still a little bit of rotation, weakness showing up in the NQ a whole lot more than the ES. You can see the structure of the NQ looks different to the ES. That's pretty important in general. And what we are doing is trying to hold value area low this morning at 23,880 or so. It dipped below, and now trying to hold. This green box is a key area of frontline support. If the base of the box holds at 23, wow, my eyes aren't even focused this morning, 23,895, then we have upside pressure to the top of the resistance zone, which is 23,957. Key observation, the 30-minute candlestick that yesterday opened at, we're still in it. Still in it. And so this tells me we're in a consolidation space, probably waiting for next week. I think NVIDIA reports next week or maybe the week after. I don't know. But this is a consolidation event. Remember, inventory works very simply one way, because the market's job is to facilitate trade. Our job is to look at where the most trade was facilitated and try to get in on the edges of that relative to trend. As we stare down this chart, we can see all of this consolidation. We had a range break, so there was liquidation and distribution at a discount, and then the same thing on the other side of it, falling right back into the range. What does this tell you? Deep dips are going to be buys, big spikes are going to be sells. There is a fair bit of exit liquidity at the top of these ranges right now, but that could flip in an instant if all of the pressure here breaks in one direction or another and holds. Okay? So that's what we're staring down. What do I want to do? Well, the 63 is down to flat. The 14 moving average, it's all over the place. Momentum, all over the place. Just wait for the deep edges. You want to trade the NQ, wait for the setups. Do something else in the meantime. All right, well, here comes that number. Yeah, it's popping out, whatever it is right now, okay, for retail sales. And that's just going to move reflexive. It's not we're just looking for strength of the consumer here, and we'll see how that goes. We are looking for the big S&P to try and come up, SPX try and come up and hit 6,500. That ought to give us some sort of event, as it were. But let's go ahead and take a look at the YM. So here's what we've got going on with the YM, right? Also, pretty outsized moves in the pre-market in terms of volume, right? This is atypical pre-market volume. And so the highest spikes, 4 a.m., that is London open. And look at what happened. They faded it and then bounced and could not get up over that ledge. That ledge right there tells me that we've got potential ceiling at 45,327. If the move pops us back into the range, it's going to be important to do the following. Observe momentum, and don't collapse down into a 3-minute chart, please, for the love of Pete, I beg of you. Don't do it. Look at the big framework, Once you see, all right, my moving average is flat, my momentum remains down. If it pops up here and the moving average stays flat like this and momentum stays down, that's going to be a sell zone. It's going to be a sell zone. Could it be a topping formation that gives you sell zone? Yes. At the point you've evaluated the moving average and the momentum, we've already established where the volume is sitting. You can collapse to your 5-minute and wait for your failure to hold, or if you're quick on the trigger, you can enter immediately, but you better stop, because it's better to have a couple of tiny ticks stop out and then wait for the big move in either direction or languish in the trade. All right? Use a lot of mental capital languishing in a trade. It just is what it is. Now, the second highest volume candlestick in the YM came at 9 o'clock. That's Asia open. And so we are now sitting in the top of that box under a downward to flat moving average with negative momentum. So the bounce gives me a sell zone to the base of that 9 o'clock candlestick. And notice, see the low volume node right here? we could drift all the way down into the 63 simple moving average, which I personally like as the key setup at around 45,000. If it works, great. If it doesn't, also great. You just trim your risk. Remember, trim your trade, you get out of it. Remember, our goal is not to be perfect, because perfect is the enemy of progress. You can't be perfect. Just move forward, manage your risk. After it's done, take a look and say, what did I observe in the past that could have led me to a better decision on where I took my profit or where I set my stop? That's all you can do. Let's take a look at micro Bitcoin. That's the Q contract. Well, look at this volume pocket. That's pretty interesting. So let's use 3 days because there's been a lot of consolidation here. We fell right off. Notice this is textbook. Let's go to a daily and let me show you something. All right. So here we have the prior highs of our contract. All right, wide angle view shows moving average flat, momentum down. That's technical divergence. High and another high, high and a lower high. That's technical divergence. If it's happening in real time, you can look at it and simply go, okay, if I'm long, I'm getting out here at the highs. And if I want to go short, I wait for the collapse of the range or the break below the close of the prior day. All right? So when we stare something like that down, we can see very obviously what is going on. Now that we look at the 30-minute chart for today, here is yesterday's high volume candlestick. That occurs at 8:30. Isn't that interesting? Right? 8:30 candle. Guess where we're sitting? Right in the middle of yesterday's opening candlestick. What is trend? 63 is down. 14 up to flat. Momentum, essentially flat. This is a range-bound formation. It's confirmed, this range-bound formation, by the size of the volume profile here. Everything is super fat. So what are we looking for? A potential test of 117,000. What would I look for? I'd look for a spike that fades and falls back into the value area high, and then I will go short. Anne-Marie, why don't you just take the short here? Very good question. Let's have a look at the momentum candles. All right, so come on, Fred. Okay, so if we stare down our MACD, here is high, and here's another high. Now notice, momentum was going down on this high. It tells us that's topping formation, right? Momentum is down, trend is down. That means our bounces are sell zones when they're going in the same direction. Now, here's the next high of that event. What's happened to momentum? It's in the opposite direction and indeed trying to hold trend. So although this looks toppy, it puts a big question mark in there to say, wait a second, do I have enough heat to pop into 120,000 and collapse? Why, yes, I do. So my thought would be, let it exhaust if it moves to the top, and then take the trade short as it collapses below this moving average. All right? Momentum sitting right in that gear of who knows what could happen here. So let's take a look at the high volume events from the overnight. The highest volume event sits right here. The highest outsized volume event, meaning above normal. But all of this motion, see the shaded event, all of that's above normal. Okay, so we're sitting underneath those normal events, except for this area, and then potentially this area. And notice, also happens to be the ceiling of our current price action events. So my thought is, if per happenstance, it gets up above 119,500, we could have ourselves a punch up into the higher regions. Otherwise, pretty much a mishmash and downward flow in my mind. Bitcoin's a little messy right now. Okay, so taking a look at oil. Momentum, down to flat, trend up. So if momentum is down to flat and trend is up, it tells us dips are going to be buy zones. Why? Because trend is master and commander, and diminishing momentum will allow the candlesticks to retrace each other. But trend, as long as it holds, gives us a breakout space. So where would that be? Something very interesting to note. We are seeing backwardation in the future contracts. The future contracts are much cheaper than the present contracts. Now, we do have a hurricane looming in the Atlantic, but that's not going to, the Mexican basin in the Gulf of Mexico is the Gulf of whatever, you know what that place is. They're safe because nothing's come up in there. And so not sure why it's thinking about the rise, but clearly dips or buys. Here's a trend line event. And so if we expand ourselves for a couple of days of motion to see what the volume profile is doing, you can see how fat and noisy this is. Trend is holding, yes. The 14 down to flat, the 63 up, holding the space, dips or buys. Breakaways, I don't love. Why? Because I'm caught in the range. So I would rather wait for it to come into the compression events that give us room. Now notice, this is yesterday's 9 a.m. candlestick. We're in the middle of it. So my estimation for high volume in that space is 63.05, a pretty nice long. And if you're saying to yourself, well, my gosh, I could make $500 trading it down there. Yeah, I don't know if that's a good short. I don't see an edge here. I'll be sitting, if I take a short right now, I would be sitting chewing on my fingernails because low, high, higher low, higher high, higher low. No. Could it be a flag pattern? Yes. Might I want to take a short at value area high? Also yes. But I'm not going to try and take a short here. I have trend and momentum saying, all right, I'm flattening out. I'm going to trade these ranges right here. All right, let's take a look at gold. Talking too much. All right, 2 days, gold action, primary consolidation. Could we be setting up for another move? Yes. What's trend? Down. What's the 14 moving average telling us? Flat. What's momentum? Non-existent. If we have a mixed bag, this is down, this is flat, this is near zero, it tells us we're going to trade a range. So could that range have direction? Yes, it absolutely could. That range could have a downward flow to it. Into where? Once again, here is the highest candlestick volume of yesterday was at 10 o'clock. I find that to be very interesting. I have to stare that down a little bit harder to figure out if that's normal. It didn't look normal to me. But at 10 o'clock, big move. What are the traders trying to do? Bounce off the floor there. Where's their obvious ceiling? Right up here at 33.94. Could I take a short there? You betcha. Absolutely, I could take a short there. Big trend is down. Momentum is flat. I'm very likely to retrace. I'm not going to have a big breakaway formation here. However, as inventory accumulates, we know that the traders are going to get tired of sitting in the range, and there is going to be a range break. What direction? I have no idea. But I do know if it breaks to the north, I know where it's going because of the prior volume interpretations. All right, we know if it breaks to the north, 3,404 gives us that next pocket, and then 3,412. I like 3,412 for short, but we'll see. Lastly, let's take a look at SPY. Retail sales came out, neither here nor there. We're broken out of resistance. A lot of heavy congestion. Trend is up, both moving averages. Momentum is up, sideways formation. So any kind of downward dip into $645.35, going to be a bounce zone. This is the most clear chart giving us direction. Dips clearly buys, trend trend going in both spaces. When is that going to reverse? If we lose the volume weighted average price at $644.20, there's going to be a little bit of a fly in the ointment. Okay, other than that, pullbacks or buy zones relative to trend, price action still has heater and price motion up to the north. Okay, all right, that's it for me. Good luck. I'm happy that it's Friday, only because I need to catch up on sleep. All right, everybody, I'll see you on the streams.